Hello, all. Welcome back. So, this week is the week of September 3rd. We've got our holiday of Labor Day coming up tomorrow. So, this recording is coming to you on Sunday, September 3rd at 4:07 p.m. Pacific Standard Time. Okay, so I always like to think about the dates and the times when I'm thinking about technical analysis. It's relevant, even though it might feel that it's not. Even when I'm journaling and taking notes, I like to write down the date and the time that I'm doing technical analysis for, um, like referring back to. All right, so anyway, so we're looking at the DXY, the US dollar index on a 3-month time frame. And I got it pretty zoomed out because I like to see patterns and trends and different things at different angles at different time frames. This is one of the farthest ones that I've ever looked out almost like a range. And today we're just going to look at the confluence or things that I find interesting that make me feel supportive. So prior to this video, I watched a little bit. I read a little bit of news like on Fortune, on Reuters. Um, I think that was Yahoo Finance, like just briefly kind of going through some things. So I took a couple of notes, a couple of things that I just want to call out when we're thinking about the fundamental analysis for the DXY and like the conversation so that we can have a better idea of the market sentiment, so we can obviously move with the flow of the dollar rather than against it. Okay, so that's the title. Do not bet against the US dollar. So right now we're looking at price action to reach the 23% or 104,638 level, which you can see, and we're on the 3-month time frame, but I have that somewhere in here, kind of close to this box. And I think this is the first area of confluence for me. I like to see, how my arbitrary lines and boxes and Fibonacci retracements just kind of line up with regular price action. All right, so, and then after that point, we'll reassess and see where price is ultimately heading. So here's just a couple of quick notes. So the last few weeks, there's been talks of a credit bubble, an impending burst. There's been an increase in risk mitigation, a higher unemployment, staving off inflation. Wages follow inflation and not the other way around. And these are just the things that I'm recapping that I've learned just over the last couple of hours of doing fundamental analysis for the month. So we've got G20 meeting September 9th. I also was reading that it might be G21 at some point. Nigeria is looking at being as weighing the costs and the benefits of joining the G20 affiliation or organization, which is the governing body for larger industrial countries. So increased CPI is seen at uh, during school shopping season. On average, consumers spent an additional $24 million on school supplies this year as compared to last year. So an additional 24 million, which I read from Yahoo Finance. Um, the U.S. economy added 187,000 non-farm jobs in August, which was confirmed last Friday through the NFP, and that was above expectations. The From an article I read, one investment strategist is saying that she's bullish on bonds and defensive sectors like healthcare, while consumers are behind on credit card payments for Nordstrom and Macy's. And that's just some of the top retailers, here in America. So basically, I'm longish on the dollar, and I think I'm gonna maintain that. I kind of carry this rhetoric like the dollar has this ever depreciating value, as you can see from the chart here, like how in the 80s, 85, it had this high peak of inflation, and then the value against the basket of 13 other currencies has been gradually lower for such a long time. But as you can see here on the chart, we're just going to really jump into the analysis right now. As you can really see from the chart, um, last year in July, when everybody was really starting to talk about inflation, right? And that's when I really started to do more research on it and discovered that it was a big thing in the 80s. We have this super bullish candle here, followed by this long bear candle here in October. Now these are we're on the 3 month time frame, so we're looking at this quarterly per the fiscal year of 2022, 2023. Um, and I'm just kind of pulling it back out because I like to look at what current price action looks like in comparison to previous price action. So, um, based on this information here from 99 and the early 2000s, I can see that price really can be bullish in this area from like the basically the 102 level up into, I would say, let's just say 113, which we've already experienced here, how we went very bullish from the 102 level as soon as we popped back up into it until about the 113 level. And then we had this drop, a retracement, as it's really technically called. Now, I talk a lot about harmonic patterns, so you can clearly see that this is a popular or familiar harmonic pattern that is showing up right here. And we're seeing that price really wants to stay above this 102 level, which for me I felt like was a major reversal area on such a large time frame. So now that we see that, let me kind of fix it here. Now that we see that price is really trying to stick above 102, even going as far as like 102.70. We have these couple dojis right here, and then this one is kind of, this is the July, so it will print in 26 days at the end of September. And we'll see, that this candle more than likely will end off very bullish. If you can look at the retracement that we have right now from the height over last summer to like all the way back here, like all the way down here, in the early or late 2000s, like 2010, blah blah blah. Um, we can look at that, price is at a 23% level, which, for me or any person that really trades with Fibonacci's, is a high indicator that price literally wants to continue to move upward in a bullish momentum, because it's, clearly rejecting or finding support, if you will, at the 23% level. So let's see. Another thing that I want to literally call out is I have another fib that kind of goes backwards because that's the way I like to look at the market sometimes. Oops. That shows that price is like right here, sitting above the 61.8%. So you can see that this fib is drawn backwards, so it's a descending valuation, I guess. I don't know really how to describe it, but it's just another way that I like to draw my fibs so I can look at the market at a different perspective. And I see that price is literally wanting to stick above the 61.8. And so that's where, we have wicks and price action handling in here. So I'm still interested to see, how price really pulls off. But I'm interested to see price come to the 71% level at about 105,746 or 106 even. And we can just kind of see how price wants to respond from there. So I have this like box that's drawn there because it's a point of interest for me. I want to see how price reacts within that zone. And I think that it is going. All right, so yeah, like I'm really gonna be interested to see how price rises to the 106 level. We don't really have any crossovers of EMAs or anything like that. But I do see that price came and like registered that this EMA is down here and that we want to continue to move forward. So for me, I like that. I don't like when, or for like when price moves so high above. I like when they just kind of come back and reaffirm what the moving average is, what they're really, what price action is really valid or doing. It's like not creating, this massive bubble that will one day break or something like that. So anyway, and I know that we're like literally looking at the dollar as everybody's kind of talking about inflation and higher interest rates and job we're coming into a new season like fall, the shopping season, which for me I feel like is the beginning of the fiscal year of 2024, like starting in October. So as the holiday sales and all that start really ramping up, I'll be curious to see how that is reflected through price action over the next several months. So, as we can go back and see, this inflation conversation really started probably, in September or maybe, however, of 2021. Maybe not the conversation of it, but we can see that it started to really rise. Maybe it didn't become a problem until like, spring of 2022. And that's when everybody's like, oh my goodness, it just blew up. So, um, now we're gonna look at again, like I'm not into predicting the markets. I just like really look at the trend. So for me, I really want to see how price comes up and responds at 106. Now the market can do like one, two, or three things. It can go up, it can go down, or it can remain neutral. And so that's what I'm really looking to see. Once we start breaking into that box, for me, that means that we're no longer in a point of neutrality like we have been since, basically like this year. We can see price just kind of been here, which is such a wide range, about 2,000 pips. Or is that right? Whatever, from 102 to 104, like 105, I'd say. We've had, a lot of neutrality. Um, Definitely ample opportunities to collect on profits or gain losses. However, like I said, I just really want to see how prices are gonna pan out once we start reaching that 106 level. This is just it on a weekly time frame. And this is probably as low as I'll go for right now. Just so because we're taking a longer outlook, and it's May. Like I'm not May, it's September. It's like the beginning of the month. So I like to do this analysis where I really take a long look. Like I look backwards, I look forward, I look at the patterns. I really will spend some time just kind of studying the chart, not necessarily like moving things around or adding different things, but just looking at how it is how the data is reflected on the screen and the story that it is telling me. So um off the bat, you see we've already had our three drive down, one, two, three. And we've got a crossover of the EMAs to the upside on the weekly time frame. We've got all this bullish momentum. Obviously, we're gonna probably experience some retracement, and then really see where price is going. So this right here is a hanging man, a single candlestick. Um, Not super concerning to me. Like I said, we might be experiencing a retracement. We might still be here in this area of neutrality. I mean, there's a lot of things, a lot of factors that are affecting the dollar right now. Um, so it will be interesting to see, really how how this price action will move over the next couple of months. Like this will affect a lot of the other, like all the other currencies and a lot of other markets, and just different things that we're doing as retail investors. So um yeah, right off the bat, like I said, I'm really looking to see what price is doing when it gets to about the 105.75 region, up to 106. And as you can see, like I've got a couple different lines. And for me, I just like to see where everything starts to add up. Oops, sorry about that. I just like to see where everything starts to add up, like when we get up here and then how price action will really respond in this zone. So like up to 106.292 will really give me a better picture of what we're expecting to experience. Okay. So in the next video, I'm going to go over gold, as I think that that's also at a really interesting standpoint. So if we're looking at this at the weekly time frame, um, we can see, let's look at the 3 day real quick. So in relation to gold, I'll look at some analysis in the next video, but like I said, we've got the crossover, it's confirmed, it's been tested. Oh, oops. Um, Now we're looking at price to just kind of break away, and this is on the 3 day time frame, which I think is, you know, I like to see, I like to look at price at all different types of time frames and angles and different stuff like that. Um, so yeah, basically, like right now, my analysis for short is for a short term buy up to 104,638. Potentially like in this region, that's what I'm personally looking at. And then after that, I want to see how price action starts to react in this zone. As you see, sometimes it can go up and then come down. It might hang out, it might act up, or might act around. But I'll be interested to see, again, like I said, the price action between above 104.65 and about 105.7. So about 100 pips or so. And then we can, really start to see what's going to happen. I think this is all going to play in relation to how gold is rising or falling. So in the next video, I'll talk a little bit more about gold, or I'll talk more about gold. We'll do a gold analysis. But for now, no bets against the US dollar. Okay. Well, thank you for watching, and I'll catch you in the next one.